eXp Realty Q4 2024 earnings, what they didn't say out loud. That's what we're talking about in today's video. Super excited to bring this to you because eXp Realty Q4 2024 earnings call. We're breaking down that entire call here for you and kind of pointing out some stuff that you may not have caught, even if you listen to it live. All right, so welcome back to the channel. As always, I'm Isaac Guzman with Real Estate CEOs, powered by LPT Realty, and I'm always here giving you the best, most relevant information on all things real estate, whether that's brokerage, how to generate more business, all the things in between, and growing a team. At the end of this, I'll give you an opportunity to learn how you can partner with us or learn more, or I don't know, get in touch with me because you're angry. It doesn't really matter. I'm here to help you out. So let's jump right in, like I said. So today we're diving deep into eXp Realty's Q4 call. And while headlines may look positive, and some are, we're going to zoom in on what's really going on behind the scenes. Because as always with earnings calls, there's what they say and there's what they don't say. And we're about to jump into that portion of it. So let's look at this: adjusted profits, but real losses. All right, so the eXp earnings call, right out of the gate, eXp touted an adjusted net income of $12.2 million. That's up 247% from last year. Sounds amazing, right? Except they also posted a net loss of $16.8 million. So here's the thing. This is what they're excluding: a $34 million litigation reserve and a nearly $5 million impairment charge to make the numbers look better. Now, I'm not saying they're doing anything out of the ordinary. Plenty of companies do this, but the numbers look better because of those things. But those aren't minor accounting blips. That's real money walking out the door. So while they technically squeezed out an adjusted profit, the underlying business is still operating at a loss. All right, so let's also look at this because the international growth is something that we really got to look into, right? So I say, like, big dreams, bigger burn. So here's the thing: it is hyping up its international growth. And with revenue up 72% year over year in Q4, that's exciting. But here's the thing: none of those markets are profitable yet, not even close. In fact, leadership themselves admitted international will likely stay unprofitable for years while they pour cash into expanding to 60 plus countries. So you're watching a long game strategy, but it's being played with investor dollars in the middle of a very volatile real estate market. That's a problem in my mind. Could be wrong. Not your investment advisor, right? All right, so let's talk about this. Agent productivity is up. That's a good thing. All right. And it's because, or it could be because, there are fewer agents. Let's break into that and NPS score. So another bright spot they highlight is agent productivity. Transactions per agent went up 12%, and sales volume per agent went up 23%. That's very strong. But hold on. eXp lost 29,000 agents last year. So yeah, productivity is up per agent, but it's largely because the bottom half of the roster was cut, left, or turned out. So it's a little like a gym saying its members are working out more after half the people quit. All right, so this next portion, let's talk about buybacks. One of the more surprising decisions: eXp spent over $141 million on stock buybacks in 2024, despite reporting a loss. Now, why does this matter? Well, you got to think about it. It boosts the share price, sure, but it also means they burned all of that cash that could have gone towards scaling international and getting it profitable sooner, tech infrastructure, or shoring up the operations, right? It's shareholder friendly in the short term, sure. And that's what you got to think. Who is this benefiting? Shareholders, okay, in the short term, but maybe not the most responsible move for long-term growth. I mean, TBD, right? To be determined. We got to take a look at this because despite all the buzz around agent support, tools, training, and better tech, gross margins are still stuck around 12.6%. And when asked how they'll handle slowing housing market in 2025, leadership said their costs are flexible, which is actually another way of, like, you got to read between the lines. Sometimes it's a way of saying we're not cutting anything yet. It's not exactly the clear-eyed strategy you want in what you could call a cooling market, right? Now, that's just me speculating. Maybe the word yet is a little harsh, right? But reading in there, that's kind of the way I heard it. All right. So now here's the other thing. They also rolled out a new training program called FastCap, and the early stats sound great. The stat they talked about: 4 appointments equals 2 signed agreements. But here's the catch: they're not reporting any actual closings or revenue impact yet. So until we see closings and retention improve, this feels more like a PR win than a business win. I could be wrong. We'll see, right? What's the real story? What's my final thoughts on all this? Well, eXp is telling a good story: international expansion, agent empowerment, industry leadership, and honestly, a lot of what they're doing could be groundbreaking. But underneath the surface, this is a company that posted a real loss in 2024, lost 29,000 agents, spent $141 million on stock buybacks, and is betting big on international markets that don't make money yet. So if the US housing market doesn't bounce back and bounce back fast, and their overseas bets take longer than expected, this is a house of cards, maybe. So while the tone of the call was upbeat, I'm not fooled, and I don't know if it's foolish to believe them. I don't want to go that far, but I don't know. It had a lot of PR polish. So when we watch the fundamentals, that's the important part, right? We got to stick to what actually works, what we know works. If we look back at their previous earning calls, it seemed like they were grasping for less things to highlight because they had solid fundamentals. It looks like they're getting away from that. This is just my opinion, of course. I'd love for someone to challenge me on this, but it's just something that's true. So thanks for watching. And if you found this breakdown helpful, make sure that you hit like, subscribe, and drop a comment and share it, right? What do you think about eXp's direction right now? Maybe I'm wrong. Maybe I'm a dummy. So here's the thing. If you want to learn more, maybe you want to debate me. I don't know. But if you want to learn more about how you can partner up with us at Real Estate CEOs and how we come alongside agents all across the US and Canada, just like you, here's what you got to do. Go in the description below, grab some one-on-one time. And until next time, keep crushing it in real estate.